In the first quarter of this year, Dubai welcomed 53 new international companies, including 11 multinationals and 42 SMEs. And all of them had to find office space in a city where prime vacancies are already below 1%. This is scarcity for them, but an opportunity for you. Normally, you see me this excited when we talk about residential projects. But after reviewing the numbers, the demand and the supply, it's clear why investor attention is shifting toward commercial real estate. In this video, we're diving into Dubai's commercial property market and explore three key things: the potential this sector holds, the growing scarcity of prime spaces, the commercial projects that I believe offer the best entry points right now. Over the last few years, Dubai has become one of the most business-friendly cities in the world. It's safe, it's stable, and it sits within a 5-hour flight from almost 70% of the world's population, giving global companies direct access to markets across Asia, Africa, and Europe. But what truly makes Dubai stand out are its business policies: 0% corporate tax for almost most free zone entities, full repatriation of profits, and no restrictions on foreign ownership. Free zone jurisdictions like the Dubai International Financial Center, Dubai Multi-Commodities Center, and Dubai Silicon Oasis allow 100% foreign ownership. Easy company setup, world-class infrastructure, and zero import or export duties. Add to that the city's freehold property zones, including Business Bay, downtown Dubai, and Jumeirah Lake Towers, where investors like you can buy, lease, or sell commercial space outright. And with this surge in business activity, commercial real estate has become one of the fastest growing asset class in the city. In the third quarter of 2025, transaction volumes climbed 19% quarter on quarter, with total office sales reaching 3.1 billion dirhams across just 1,100 units, an 18% quarter on quarter and 93% year on year surge in value. Among these, Business Bay remained the clear frontrunner. Prime districts like Jumeirah Lake Towers together accounted for 43% of all office inquiries, dominated by small-medium enterprises sized spaces under 1,000 square feet. Average office rents rose 17.3% year-on-year to around 115 dirhams per square foot, while leasing transactions increased 6% on the supply side. Off-plan transactions reached 2.4 billion dirhams across 1,100 deals. Of this, the office and retail segment accounted 1.86 billion dirhams through just 640 transactions. As we mentioned earlier, prime vacancies are just under 1%, so to meet that demand, Dubai's office landscape is set for expansion. With 680,000 square meters of new supply scheduled by 2027, much of this pipeline will be concentrated in Business Bay, Motor City, and other high-demand areas. So now that we're clear on the supply and demand, let's talk about how these buildings are actually graded. Because when you understand how quality, location, amenities, and age determine an office's grade, you'll see exactly why Grade A offices are in such short supply and such high demand. Now, you might be wondering what exactly makes a commercial property Grade A versus Grade B or C. And why should I care? Well, here's the thing. These aren't just labels developers throw around to sound fancy. They're classifications that directly impact tenant quality, rental rates, vacancy levels, and most importantly, your long-term returns. So let's break this down. Grade A properties are brand new or recently refurbished buildings, typically under 15 years old, located in prime, centrally accessible areas like DIFC, downtown Dubai, and Business Bay. They are built to the highest specifications with premium finishes, state-of-the-art infrastructure, energy-efficient systems, and top-tier amenities. Grade B properties are well-maintained buildings with good specifications, but they fall slightly short of Grade A standards. They might be older, usually 15 to 25 years, or are located in less central areas. They still attract quality tenants, but may lack the latest building technology or premium finishes that a Grade A commands. Grade C properties are older buildings, often 25 years and older, in secondary or less desirable locations. They typically require more maintenance, have higher vacancy risk, and attract smaller or shorter term tenants. Now here's why this matters to you as an investor. Grade A offices command the strongest tenant demand, the lowest vacancy rates, the highest rents, and the most consistent capital appreciation. Right now, if we look at this 40,000 square foot office in Grade A tower in Business Bay, it is currently going on rent for 17.7 million dirhams per year. Here's another 29,000 square foot office in a different tower, and it is going for 7.8 million dirhams per year. From an investment perspective, this 40,000 square foot office in Business Bay is priced at 6,500 to 7,000 dirhams per square foot. This gives the owner of this lucrative property a strong income of 450 dirhams per square foot a year and a 7% rental yield. For income-focused investors seeking stability and growth, Grade A is where the institutional capital flows and where your risk-adjusted returns are strongest. So in this video, we're focusing exclusively on Grade A commercial properties because that's where the scarcity is and that's where the opportunity lies. And when you look across Dubai's commercial landscape, one district consistently rises to the top for Grade A office supply and investor demand: Business Bay. Business Bay has evolved into one of Dubai's central business districts, positioned right along Sheikh Zayed Road and the Dubai Canal, directly adjacent to downtown. You're 5 minutes from the Burj Khalifa, 7 minutes from Dubai Mall, and under 10 minutes from multiple metro stations on both the red and green lines. Business Bay sits directly on Sheikh Zayed Road with seamless access to Al Khail Road and the Financial Center Road, connecting you to the airport in 15 minutes and Abu Dhabi in under an hour. For multinational firms and SMEs relocating to Dubai, this accessibility is non-negotiable and is the cause for higher demand. And the numbers reflect that demand. In Q3 of 2025, Business Bay recorded 328 office transactions, the highest of any district in Dubai. Average office rents in Business Bay reached approximately 160 dirhams per square foot, well above the citywide average of 115 dirhams per square foot. But here's where it gets even more compelling. In Business Bay, the average rent for Grade A office space is 350 dirhams per square foot compared to 173 dirhams per square foot for a conventional office space, reflecting a nearly 50% premium for premium grade properties. And tenant demand, it's dominated by the very startups that are driving Dubai's commercial boom. 88% of new leases in Business Bay in 2025 were for spaces under 1,000 square feet, which are small medium enterprises, startups, and branch offices of international firms looking for premium addresses without massive footprints. Rent growth in premium Grade A districts like Business Bay surged 44% year-on-year in Q3, nearly triple the rate of older, lower-grade stock elsewhere in the city. Now, you might be wondering that these numbers are great, so which successful projects can I get in on? That's the thing. You cannot. When you look at ready commercial units in Business Bay today, existing properties like Opus Tower, Vision Tower are trading at 6,500 to 7,000 dirhams per square foot. At these prices, the barrier to entry is extremely high. But what if I told you you could enter the same market in the same district with the same long-term fundamentals, but at a significantly better entry point? That's the off-plan opportunity we're about to explore. Because right now, there are 4 to 5 Grade A commercial projects where developers are offering early investors entry at a fraction of current market rates. And by the time these projects complete and lease up, the gap between what you paid and what the market will pay, that's your upside. So let's dive right into these 5 projects and show you exactly where the smart money is moving right now. Now, you might be thinking all these commercial towers in Dubai look amazing, but which ones will actually perform once they're built? And honestly, that's a very fair question because every developer says the same thing. Grade A quality, premium finishes, premium location. We've heard it all 1,000 times. But here's the real issue most investors don't see until it's too late. Not every Grade A tower behaves like a grade A tower. Two buildings can launch exactly at the same district, at the same price, same brochure, yet one becomes a magnet for multinational tenants and the other ends up chasing occupancy with discounts. One appreciates steadily and the other becomes completely dependent on hype cycles. So in this chapter, I'm breaking down Dubai's strongest upcoming commercial landmarks and showing you what actually separates a performer from a pretty brochure. Let's get into it. First up, we have Burj Capital by Centurion Properties. They may have delivered over 8 million square feet in Dubai, but I can honestly say Burj Capital is clearly their level up moment. What makes them stand out is their focus on functionality rather than flashiness. Burj Capital's latest Grade A office development offers over 350,000 square feet of premium office space with floor plates ranging from 12,000 to 15,000 square feet. Rising up to 45 floors, the project combines architectural identity with functionality, making it one of the most distinctive additions to Dubai's skyline. According to Moksh Garg, the managing director of Centurion Properties, even though it is a commercial tower, this is the only commercial tower in Dubai today that offers amenities typically associated with a residential building, which means the amenities are going to be quite similar to a residential building. They have a lot to offer. Scheduled for delivery around December 2028, the development aligns with Dubai's growth trajectory and the increasing demand for Grade A office supply, which remains limited in the market. Burj Capital has integrated advanced smart building systems, sustainability features, and wellness-focused design, ensuring the project is future-ready and attractive to blue-chip corporations. What makes it different is the positioning. Most business bay towers feel squeezed between neighbors. Burj Capital opens directly towards the district's largest urban park, with clean views over the canal and Burj Khalifa. For investors, the financial structure is designed to maximize ROI while minimizing upfront risk. The payment plan includes 50% during construction and 50% on handover, offering flexibility and reducing capital pressure. Combined with Burj Capital's proven track record and reputation for delivering iconic projects, this development represents a rare opportunity, a Grade A office tower backed by a trusted brand designed to attract elite tenants and structured to deliver sustainable long-term returns. Next up, we have Lumena Alta by Omniath, one of Dubai's most iconic Grade A office towers, rising 380 meters above Business Bay. The tower is designed for global visionaries and business leaders who demand prestige, functionality, and innovation, with office layouts ranging from 4,966 square feet to almost 17,000 square feet. Investors can choose between flexible standard units, expansive half-floor options, or exclusive full-floor spaces. Following the successful sellout of Lumena, I'm sure this building will be one of the next best sellout of the region. The tower will comprise of 91 customizable office units, in which there are 59 standard, 30 half-floor and 2 full-floor layouts ranging from 4,900 to 17,000 square feet, scheduled for completion in just 2026. Lumena Alta delivers more than just workspace. It integrates luxury, commercial hospitality, and lifestyle elements into a single ecosystem. For investors, the appeal is strengthened by Omniath's reputation for delivering landmark projects and by a flexible payment plan of 50-50 designed to ease your entry. Structured with staggered installments during construction and on handover, the plan reduces upfront capital pressure while maximizing your ROI. The tower is also certified LEED Platinum, Well Building Platinum, Wired Score Platinum, and Smart Score Platinum, which ensures sustainability, smart technology, and energy efficiency for future-ready workspaces. If you think Lumena is the landmark, Inara is the art piece. Inara by Omniath is the developer's first ultra-luxury commercial project. Rising to 120 meters in Business Bay, the tower introduces a new benchmark for Grade A offices, combining architectural innovation with bespoke services Tailored for the global business elite, the project is distinguished by its limited supply of only 34 offices, including 11 grand offices, 9 ultra grand offices, and 2 bespoke triple lux offices, each ranging from 8,321 to 38,630 square feet. This scarcity ensures exclusivity and positions Inara as one of the most desirable commercial addresses in Dubai. Beyond workspaces, the tower integrates a private members club across the first 4 levels, creating a hub for networking and executive collaboration. Scheduled for handover in Q4 of 2028 or Q1 2029, Inara is also LEED Platinum pre-certified, incorporating smart building systems with automated lighting, air conditioning, and environmental controls for optimal efficiency. The payment plan is structured at 5% down payment, 70% during construction, and 30% on handover, reducing all upfront capital pressure. With most units already sold out, Inara represents a rare opportunity to secure a place in Dubai's next commercial icon. Next up, we have HQ by Rove, Dubai's first hospitality-branded office tower. Unlike traditional developments that hand over empty shells requiring months of costly fit-outs, HQ by Rove delivers fully furnished, plug-and-play offices ready from day one. This model saves businesses time, capital, and operational headaches while giving investors a product that is immediately income-generating. Developed by the Earth Group in partnership with Rove Hotels, the project blends smart design, simplicity, and hotel-level efficiency into Grade A office space. The tower rises in Marasi Bay, and the offices range from 625 square feet to 5,790 square feet with modular layouts and adapt to different team sizes and needs. Operational excellence is embedded into the infrastructure. 21 high-speed lifts, nearly 1,000 parking spaces, and a dedicated private access road ensuring seamless accessibility. This tower is also LEED certified, incorporating smart building systems for lighting, air conditioning, and environmental controls, aligning with Dubai's sustainability goals. For investors, the financial structure is straightforward and very attractive. A 50-50 payment plan with handover schedule in Q1 of 2029. This long lead time allows capital flexibility while securing a stake in a future-ready commercial icon. Lastly, I want to talk to you about a true gem that has just launched, which is called 31 Above by none other than Beyond Developments. This is Beyond's first commercial property in Maritime City. For investors looking at premium commercial assets, 31 Above stands out as one of the strongest Grade A office plays launching this year. Developed by Beyond, right in Maritime City, the tower offers 116 limited office units, all shell and core, with large floor plates and extremely low density. Only 4 offices per floor. Pricing starts around 3,500 dirhams per square foot, supported by a 50-50 payment plan, making the entry relatively accessible compared to other prime commercial districts. The project's architecture, high performance specifications, and wellness-driven amenities position it firmly in the future-ready workplace category, which has seen rising demand from both local and international companies. With handovers scheduled for Q1 of 2029 and freehold commercial ownership rare in such a strategic location, 31 Above offers a combination of long-term capital appreciation and strong potential rental yields, driven by the tightening supply of modern office space in Dubai. So let me ask you this. When else will you find Grade A office space in Dubai at 2,500 to 3,000 dirhams per square foot, when ready properties are transacting at 7,000 dirhams and above? That's not just a low entry point, that's a 120 to 180% upside locked in before these towers even complete. Look, I get it. Off-plan always feels riskier than buying something you can touch. But here's what you need to understand. By the time these projects are ready, that gap closes. The market doesn't care about what you paid 3 years ago. It cares about what tenants will pay today. And with prime vacancies under 1%, rental yields pushing 7% and above, grade A rents surging 44% year on year. That demand is not slowing down. You're not speculating, you're securing institutional grade assets at pre-market pricing backed by proven developers, structured payment plans, and a city that's adding 680,000 square meters of new office supply by 2027, most of which will not be grade A. So the question isn't whether Dubai's commercial market will grow, it's whether you'll be positioned to benefit from it. And as your trusted property investment advisor, I want you to get the most out of this growing demand of commercial real estate. I'm Hira Nazir and I thank you for watching this video. I hope to see you in the next one. Take care.